I don't know. I've definitely been thinking about this, and I've been chatting with some friends. And so, from kind of a moral perspective, I'm curious your guys' thoughts on fractional reserve banking in general, right? Because that's part of the problem here, right? Is that like the banks do not hold your deposit, right? Like, and that's
Right.
why you could have these bank runs, right? If people start trying to withdraw and too many people start to withdraw, then you realize that they're not actually holding your money. I don't know. Do you guys have thoughts on that? The whole the whole
Uh,
system.
yeah, I think we've like covered this a little bit in the past, just with the concept of usury and whatnot, and
Yeah.
kind of what that entails. Yeah, I mean, I don't like it. Overall, I don't think it's a healthy system. Um, because it's one thing if you're putting your money into like an investment of some sort, but that's really not what people who are most of us who are putting our money in banks are really thinking. Like, especially, with the way the interest rates have been for the past, 15, almost 20 years now, you're not really making any money. Like, you're not putting your money in your bank account because you're like, oh man, I'm investing in my future.
Yeah.
Like, that's crazy. You're just holding your money there because it's a safe place to store it. And, and even worse than that, it's not just a safe place to store it. It's the only way you can transact because you need a bank account so that you can
Mm-hmm.
shop online and you can do normal data. You can pay your bills. That's all online. So now you have to go through a bank. There's really you can't just hold cash. So you're not really getting anything for it, and they're making money off of your money that you're forced
Yeah.
to give them.
Yeah.
So that's wild.
No, I think you're right. I think it's weird how like you have to have a bank account. You can't operate
Yeah.
function in the world without it. But no, there is I remember when I was a kid and I learned that, I was getting 0.1% interest and I was like, oh gosh, if I had $1 million, I'd be getting like 1,000 a year, and thinking I remember doing the math as a kid. But no,
Yeah.
you're right. And it's I think there's and maybe it'd be interesting if there were kind of two different entities that did this, right? Maybe fractional reserve banking is fine, if it is seen as an investment, right? But I think most people look at a bank as a custodial service, right? They're going to hold my money so that I can use it online, right? And
The,
and
Mhm.
that'd be great.
there,
But they're not custodial, right?
Mhm.
But then it would be another thing if I would say, hey, I have a local bank. They're giving mortgages to people in the community. I want to like invest in the community, and maybe they give you a bigger percentage because that's their model. Is not, this isn't custodial. This is,
there's
I
banks
don't know.
there's banks that do that, Matt.
Do they?
If you are a big enough swinger in a small enough like demographic, and you have a connection
Mm-hmm.
with your banker, you can ask them, "Hey, I am doing a lot of business with you here, and I want to keep doing business with you, but I need more interest than what I am getting today on what I have with you." So you have to be kind of like a real estate mogul, essentially, to get that
Yeah.
kind of cachet with your bank. But it's not for just Joe Schmo. Like, I've heard of one situation with a particular YouTube finance person that does this, and it's actually really interesting. Could be a cool person to have on the podcast someday. Um, just to hear some of his thoughts. But yeah, there are ways. It's kind of a who you know situation.
But that's the point. Is I mean, that is what they're doing. Is they are investing your
Yeah.
money for such a high profits. They want people to deposit. So like, if they, I don't know. So it might not be a bad model if you look at it as an investment, right? To say,
hmm
hey, I'm putting money in here because they are investing in the local community, and I'm going to get, a high enough interest rate on it.
I've heard, I've heard,
And
I've
it'd be
heard,
nice
I've
if
heard
they
two
had
and a
that
half
for
to three
everyone.
percent.
Yeah, but I'm saying it would be nice if that was like it for everyone, because that is the model
Sure.
they use, So like, why you can only, you're right, you can only get it if you are the top depositor in that bank, and they
Yeah.
want to keep you there.
Well, I don't know if it was you that mentioned this or somebody more reputable. No, I'm just kidding.
Thanks.
But somebody said that
It was
there
probably
is
somebody
actually
more reputable.
Probably
probably.
odds are in that favor. Yeah.
But I heard somebody saying that there actually happened people who've tried in the past to file, for a bank that would just be a custodial service, and they've been denied. You're not
Mm.
allowed to operate a bank that's solely custodial. And that kind of goes back to this whole concept of like banks being like private banks or something, which makes no sense to me. It's like with the amount of like federal regulation and federal oversight, like there really is no like truly private bank. So, but I mean that is unfortunate. They just
Mhm.
don't allow a a non-fractional reserve system.
Mhm.
Honestly, if I was like trying to just deal with the regular banking system, I mean, shoot, composite rate for I bonds issued this month through October, it's at 4.3%. So average person can put 10 grand into an I bond annually. You'd be making more
Yeah.
doing an I bond right now than holding your money in the bank. Like I said, everybody is limited to 10 grand annually, but they've been making a comeback. So
Yeah.
that's not the
I
worst idea.
in I bonds, correct me. They're like they go with inflation, right? So
Yep.
they look
Hmm.
at okay, yeah. Because I heard a bunch of people doing I bonds, back at the height of inflation when it was like eight
What's the
nine
difference
percent.
between I bonds and T bonds?
That I don't know, but I know that I bonds have been making a resurgence. I was actually at my bank this past weekend and we were talking about it and they were saying, yeah, they've made a huge comeback.
Yeah. So I think I bonds follow inflation rates. They follow CPI, and so they adjust the
Mm.
interest rate, every month or so. But then the T bonds, I think, follow they're from the Treasury, so they're at whatever the Treasury rate is. It is my understanding. I could be wrong there. Oh, and Connor, it if it wasn't me, I read that
Okay.
somewhere. So I also saw it. But no, it is funny. It's just funny, right? Because I think the main argument against having a fully custodial bank is that everybody would say, oh, wait, well, I'm not getting any interest anyway, so I'm going to keep my
Exactly.
funds safe. And then everyone pulls out of every other fractional reserve bank to go into the custodial one. And yeah, it's a
Yeah, imagine that. They would
mess.
do that, wouldn't they?
Yeah, they would. Because that would be the economic incentive, right? Yeah.